Hello, 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 everybody. I am Dr. Kerrie. I am a realtor, investor, Airbnb superhost, and motivational speaker. But today I'm wearing my realtor hat and I'm excited to be presenting with my friend Becca, the homeowner in 2022. Home ownership in 2022. I'm excited. We're going to bring you a great class today. Make sure you share this live with any of your family or your friends that want to own a home, whether it's in 2022, 2023, 2024. We are going to give you all the tips, all the tricks, all the steps that you need to be a homeowner. All right. But I'm going to let my friend Becca, I want you to go ahead and introduce yourself for the people.
Awesome. Thank you, Dr. Kerrie. I'm Becca Christensen. I work with Mortgage Right, and I am a mortgage lender here. I'm based in the Austin, Texas, or Central Texas area, but I'm licensed in Texas and Florida, so I can help you with any residential purchases, refinances, 1 to 4 units in both Texas and Florida. And my motto is we make loans fun. And I really strive to do that. But the first step to do that is really to de-stress the process by giving you all the information that you need and making you feel empowered. And that then when the process is less stressful, leaves a lot of room for fun. So let's do this, Dr. Kerrie.
Absolutely. And I will say that Becca is like my number one lender right now. So any of my clients always be like, hey, Becca, you got time? And she is available by text. She'll pick up the phone. If she can't, she'll always call you back. And I'm telling you, she has helped me get my clients to the finish line. We actually just got an offer accepted today with one of my first time homeowners, and Becca is already on top of it. So y'all are in for a treat tonight. Again, I'm Dr. Kerrie. I am a realtor and so many other things, but tonight we just focusing on real estate. All right. And then Becca is my lender, my go-to right now. And I'm excited. All right. So let's dive into home ownership in 2022. But before we start, in the comments, I need to know where you're from. All right. I know I don't just have Austin, Texas people in here. Where are you from? Let us know and we'll shout you out throughout the broadcast. All right. Make sure you share this live with anybody that wants to learn how to become a homeowner. All right. So let's get into our training for tonight. You ready, Becca?
I'm ready. Let's do this.
All right. So home ownership. All right. So there's a lot of benefits from being a homeowner. Okay. So you can be a first-time homeowner. All right. You can be an investor. It doesn't matter. We are talking about the benefits, right? So federal tax benefits, right? So your tax deductions. You can build up equity. If you're in Austin, Texas, you should know this all too well. We are building up equity before we even close on homes. That is how the market is right now, right? You also have privacy, all right? As a renter, if you're in an apartment or a townhome, you're sharing walls, all right? But if you are a homeowner, you got your own house. You don't have to worry about that. Play your music as loud as you want. Watch whatever movie with the surround sound, and nobody's going to bother you, okay? Stable payments. As some people know as renters, they're going to increase your rent all the time. All right. So the benefits of having a home is you have a steady mortgage payment every single month. Okay. And it's just a great long-term investment. So those are just a few home ownership benefits that we're talking about tonight. All right. But let's
dive really quick.
Go ahead.
So one quote that I love is that you're paying a mortgage any month. It's just you're paying somebody else's mortgage when you're renting instead of paying your mortgage and investing in your assets and future when you're paying your mortgage. So you're paying a mortgage regardless. It's just whose mortgage are you paying?
Whose mortgage are you paying? I'd rather be paying my own mortgage, right, Becca?
Yeah, me too.
So things I want to talk about, right? We're going to go through several different steps tonight, but I always like talking about goal setting and budgeting. All right. So before we even dive into owning a home, you need to know how much house you really can afford. All right. So I always tell my clients, right? Let's look at your savings. How much money do you have saved up right now? Okay. Do you have enough to cover your down payment and your closing costs? Yes, you can get down payment assistance. However, it doesn't cover all of it. All right. Correct me if I'm wrong, Becca, right?
Yep, that's correct. Yeah, typically covers just the down payment. You still have other costs associated with the purchase.
Yeah. So you need to make sure you're setting goals. How much money each month do you need to set aside to make sure you have enough for a down payment? Now, if you go like the traditional route, all right, you're going to be putting down at least 3%. Okay, that is pretty much standard. Now, if we get into investor loans, you're going to be putting down 20%. But being a homeowner, you're looking at 3%. All right. So when you think about that and you do the math, that's a good percentage. Okay. You want to add anything to that, Becca?
No, I think that's perfect. It's so just depending on which loan program you're using, which we'll talk about more later. I would say your range is like 3.5 to 5% down, knowing that some of that could be covered with down payment assistance. But yeah, that's kind of your range for when you're buying a primary residence.
Yep. Awesome. All right. So make sure you set goals and you start budgeting every single month and putting money aside, right? Whether you're putting in your savings account, whether you're putting it in the stock market and you want to take the risk, it just depends on your risk tolerance to help your money grow. Okay. But you got to make sure short-term and long-term goals, even if you can't own a home right now, right? The things that we're going to teach you tonight are going to set you up for the future. So you can become a homeowner in 2023, 2024. So write down all these notes. I hope you got your pen and your journal and you're taking down some good notes. So let's dive into pre-approval letter from a qualified lender. What you got for us, Becca?
Sorry, I was like, wait a minute, where are we? All right, so with the pre-approval process, and I think let me first talk about pre-qualification versus pre-approval, because I think those terms are both used a lot and they're a little confusing. So a pre-qualification technically is just a mortgage professional like myself reviewing your application and mortgage credit. Now, a pre-approval, which Dr. Kerrie, you could kind of pipe in here if need be, but a pre-approval is really where your agent, your realtor needs you to be. And that is the next step of reviewing your documents so that I have you as proved as possible. And I've gone through all of the documents and I've double checked everything so that as you're out shopping for a home, you're shopping with purpose and we don't suddenly have this hurdle or this red flag that pops up later in the process that makes the whole thing go away and allows you not to buy. Nobody likes that situation. That's not fun for anybody. And I never want to put my clients in that situation. So I would rather do a thorough job pre-approving, even if that means, okay, because of the type of income you have, maybe I need to do a little bit more digging or something along those lines. But I'd rather do that up front just to set us up for success so we have much smoother sailing moving forward. So that process can take kind of as fast or slow as you need to. It's definitely good to go into the pre-approval process before you're standing in front of a house and you want to make an offer on it, ideally. Although I've had that happen many a time, so it happens. But yeah, so I would say most of the time my clients take 2 to 3 days to do it because I'll do the application, I'll follow back up with them, I'll request the documents, and once they have a chance to upload the documents, I review and finish up from there. It can happen in an hour if you give all that to me super quick. Most of my clients end up taking a few days. And then at that point, then Dr. Kerrie or whomever your realtor is, we're ready to take you out shopping, looking at homes. And then I also schedule a call with you so we can go over all the numbers and such. So so we talked about credit score. It was super important. That and your debt to income ratio are really the two key factors with a pre-approval. So credit score is really important, as we might see coming across the screen. I'm not sure if it's showing it, but really at this point, regardless of the loan type that we're using, the current minimum credit score is 620. And so that's another thing. If you feel like you're ready, it's good to go ahead and do that application, because if we find perhaps that we need to work on credit a little bit, now we're not under the gun to do that. We've got some time to figure things out and make a plan to approach the credit and get that where it needs to be and move forward. But depending on where your score is, that will dictate interest rate. It'll dictate which loan type we use, lots of different things. And then your debt to income ratio is also really important. Again, depending on the loan product. Say that again.
That's a big one. Debt to income ratio.
It really is. Yeah. So depending on the loan program we're using, typically we're talking 43 to up to just below 50% debt to income ratio, which that would mean half of your gross income, up like the maximum half of your gross income. So just to speak to that, the debts that we're looking at are going to be pulled directly from your credit report. And whatever the minimum payment is listed on the credit report is what is used, with a couple caveats. So I know sometimes people think, oh, maybe I have a large amount of credit card debt, but what's the minimum payment? Because the minimum payment is what's going to get used in your debt to income ratio. The other little thought is student loans. I know a lot of people ask about, well, I have my student loans deferred, or something along those lines, or I have a payment plan. So depending on which loan program we're using and also what the rules are at that time, we do still have to account for student loan payments in some way, even if the current payment is zero. And I'll walk you through that. They've actually recently made a new rule that makes it a little bit more manageable. But yeah, those debts are coming directly from the credit report. And then your income, depending on your type of income, but let's just assume your W-2 kind of standard income. We're looking at your pay stubs and your W-2s, and we're going off of the gross amount, which is the amount before taxes get taken out. And that together makes your debt to income ratio.
That's good. Thank you, Becca, for breaking that down. Just because I know when people come to me, they're really confused. Like, what is debt to income ratio? What does my credit score need to be? So I hope y'all were taking notes. And she explained to you 620 is ideal. All right. 620 is ideal. And we need to have your debt to income ratio as low as possible. Okay. So get those, check out your minimum credit statement, the minimum balance, and things like that, in order to make sure that your debt to income ratio is as low as possible and your credit score is as high as possible. Okay. But I do know of lenders being able to approve you for 580. Yes, that's out there in the world, but we are talking about being the best candidate, the best buyer that you possibly can. All right. So we need you at a 620.
Yeah. And setting you up for the best or the most ideal loan for the life of the loan. So we're talking, like typically a 30-year fixed rate. And so like Dr. Kerrie said, there are options. I don't currently have those options, but there are options that exist in the world for less than 620 scores. But just kind of keeping in mind the interest rate's going to be a fair bit higher. And so you're actually potentially looking at paying more over the life of the loan for the home for doing that. And so what can we do strategically to get our score to a place where you're not paying as much in interest over the life of the loan?
Awesome. Thank you, Becca. All right, I'm going to go to the comments real quick. Let's see who's out here. What is up, Cherish? Hey, Shonda, I see you. What is up, Matthew? Thank y'all so much for tuning in. Make sure y'all drop where y'all are from. All right, Brittany, I see you. Welcome, welcome, welcome to the broadcast. All right, let's dive right back in. We're going to talk about step 3. All right, so step 3 is important. All right, I'm talking because I am a trusted agent. All right, but if you don't choose me as your realtor, which is totally okay, because I'm always about giving people information. All right, this is not to promote my business. This is to help you become the best homeowner you can be. Right, but you need to make sure you find an agent that understands the market. All right. Now, Austin, Texas, right now, we are back in the swing of things. We are seeing multiple offers on a lot of houses right now. I can give you an example, right? We have a client right now who is a first-time homeowner. I have wrote, I believe, maybe 5 offers, and Becca has sent me pre-approval letters for her. However, we have to, fight the good fight. We have to stay in it. And we were able to get her an offer that was accepted today on a beautiful condo that she really, really loved, right? So yes, our market right now is a little bit challenging. However, you have to keep fighting. You can't give up. And you have a strong team between myself and with Becca. All right. Now, let's talk about step 4. Step 4 is the best part. Okay, we get to go house hunting. All right. So what I like to do is whenever Becca sends me the pre-approval letter, what I do is I meet with my clients and I talk to them. Hey, what are your needs? What are your wants? These are all the different places that I am looking for houses, from the MLS, right? From Zillow. I'll look at for sale by owners. I will look at even at some expired listings and listings that have been on the market a little bit longer to see if they'll fit. What I'll do is once I get those, I will send them out to my client and they will let me know what are their top 3 to 4 listings that they want to see. I schedule appointments and then we go out there and we start looking at the homes that they're interested in, right? So it's really not a super stressful process because we try to make sure you are educated and you truly know what you're doing before we even start looking at houses, all right? Because you have to get pre-approved and go through those steps. All right, y'all, if y'all have any questions at all, make sure you drop those in the comments. Once we get towards the end, we're going to answer all questions. All right. Now, let's talk about step 5, offer and negotiation. Okay. So like I told you before, we have a client that is a first time homeowner, right? So we have been able to I put in several different offers for her. All right. Now the offer includes a down payment. All right. And again, I talked about this earlier. Down payment is normally about 3%. Okay. Depending on what kind of loan you're getting. All right. We're going to talk about option money. Now, the option money it can be $200. It can be $500. It can be $1,000 in this market. I've seen $2,000 options, right? But what does that do? The option money is for the option period. So after your offer gets accepted, I write it up, I send it to the listing agent. They say, yes, we're going to accept your offer. All right. We have 72 hours to get our option money and our earnest money to the title company, right? They do have couriers, so they can send people to pick up checks, but it needs to be one check. Now, the option money is going to be it can be 3 days in this market. I've seen 5 days, and normally it's 7 to 10. That's in an ideal world, right? But I have seen 3, I have seen 5. We have to call an inspector to come out to the house that you want to buy, and they need to inspect the property. Okay, they're looking for the foundation. They're going to check the plumbing, the electrical, termites, the roof. They're looking literally on top of the house, under the house, every single thing to make sure that the house is ready to go for you. Now, say something comes up, say the foundation needs some work, right? Then that's when your realtor needs to go back to the listing agent, all right, and talk to them about negotiating. So who's going to fix the foundation, or you have an option in between those days to opt out. Now, you will lose that $200, that $500, $2,000. However, you have a way out. Okay. So don't feel like once the offer goes in, you are locked down. You can get out of the contract. Okay. Now, that covers that. The earnest money is 1% of the offer price. Okay. So if you put an offer at $200,000, $2,000 is your earnest money. Okay. So you have your option, you have your earnest. Your earnest money is refundable if you decide to back out of the deal. Okay. Now, if you go past that option, that earnest money is up. If they decide to give it to you, great. But most of the time, they're going to keep your earnest money. Okay. Now, we have title policy. In this market, I've seen a lot of buyers, put in the contract. I want to pay the title policy because I really want this house. All right. But most of the time, the seller is going to be the one that pays the title policy. Okay. Now that price, kind of varied, right, Becca?
Yeah, it's based on the sales price of the home. Yeah.
Okay. Now your seller's disclosure is another thing. So when you are a buyer and you are wanting to get a house, there is something called a seller's disclosure that the seller writes down everything. If there's anything damaged with the house, any repairs that have been done, you have to review that. And then that can also give you a way out. So if you see something that seller's disclosure that you're not interested in, you have another way out. Okay, during that option period. Okay, the survey is a part of that. Most places have surveys, but sometimes either you're going to have to pay for the survey or the seller will. Okay, let's talk about some expected expenses, Becca.
Yeah, absolutely. Okay, so first of all, let's talk about what to expect monthly, and this is something I actually have for my clients. I have a great mobile app. And actually, I might as well just throw it out there. So you can text my name, Becca, Becca, to 36260, and it will get texted to you. You just then need to click on the link and go through the prompts to get it as an app on your phone. But on the bottom is a calculator feature. And I really encourage you to use a good mortgage calculator so you have all the elements accounted for. Because sometimes if you just go online, it will just give you a principal and interest payment, or the PI part, and that's not the full monthly payment. So if you notice across the screen, we have PITIA. That's principal, interest, taxes, property taxes, insurance, your homeowner's insurance, and also potentially mortgage insurance, depending on the loan type, and then the association dues, or HOA. So all of that together needs to be accounted for your monthly payment. In the case of a condo like our client today, it's important to note, okay, we have the payment that we're going to pay for the mortgage. I also have HOA dues, and that could be, 100 to 200. It could be a chunk, and it's not just like nothing. It's important to know about those things and account for all of it. When Dr. Kerrie was talking about budgeting, like what can I spend each month? It's important to know what your total expense is going to be and not miss out on those things, because it may be like, hey, I'm comfortable with $1,700. but oh, we forgot, oh, it's 1900, and oh, well, you may not be comfortable with that. So it's important to know all the pieces. Expected expenses, as far as your costs go when you're purchasing, you really have three main categories. You've got your down payment, which is, as we've been talking about, roughly 3% of your sales price. Your closing costs, which are all of the third-party elements that are involved. So myself, appraiser, title, all these other things. And then you have some prepaids and reserves. Prepaids are a few things that are paid in advance of owning the home, which is just at closing, but it's still in advance of owning the home. And then the setup of your escrow account. And your escrow account's for your property taxes and your homeowner's insurance. So that PITI, principal and interest, goes towards paying down your mortgage. Taxes and insurance goes into this little escrow. I think of it like a piggy bank. It's just a non-interest bearing account that's sort of held. And each month you make your payment, more money goes into that escrow piggy bank. And then when the property tax bill is due, or when your insurance bill is due each year, money is taken from that escrow account to pay those for you. So they're a part of your monthly payment. You don't have to like remember to have a big chunk bill at the end. But yeah, down payment, closing costs, and prepaid items all together. And that's something that we go through once you're pre-approved so that you know what to expect, both monthly payment and all of those costs. The only number that I don't account for when we're talking about numbers, and I always mention this, so we're still talking about it, it's just not on your estimate, is the home inspection. Just because that's separate, it's not required by the lender for you to get a home inspection. It's just, as Dr. Kerrie would probably back me up, highly recommended. Highly recommended that you get one. That's just so you know all the ins and outs, whether or not something actually gets fixed or you get credit from the seller to fix it. It's still important for you to know that if something is an issue, either I've got to fix that right away, or hey, I'm going to be keeping a lookout on that as I own the property just to make sure it stays good, or hey, I know in a few years maybe I'm going to need to address something. So it gives you all that info. Dr. Kerrie, $300 to $500 for that home inspection.
Yeah. Mm-hmm.
Cost wise? Okay.
Yes, ma'am.
So that's really the only other thing. And then Dr. Kerrie already talked about earnest money and option money. I'll just add in earnest money. I like to think about like a security deposit. So that's the one, again, during your option period that you could get back if you decide to exit the contract. Option money, I think of like a convenience fee. The seller's going to have to relist the home if you exit the contract. So that's to them for that inconvenience, if you will. But assuming everything is sunshine and rainbows and goes fantastic and you move forward and you close on the loan, you still get credit for having paid your earnest and option money. So those are paid at the beginning and we subtract them from the amount that's due at closing. So it's not like you just lost that money.
Yeah, I love that. I'm glad that you added that because I know people are probably going to ask that. Do I lose out on my earnest money and my option money? No, it goes towards it. Okay.
Yes.
Now, the beautiful thing about using Becca's app is for my first time homeowner, she literally was trained to go in, put in the sales price. She put in what the down payment is, what the interest is, like every single thing, homeowner's insurance. She was calculating everything. So she knew if we move forward with this, Becca finalized the numbers for her or gave her an estimate. She was like, okay, Dr. Kerrie, I for sure want to move forward. I'm ready to pay my earnest and my option money. Okay. So it's really important that you know your numbers. You never want to move forward on a home if you are not comfortable with what that monthly mortgage payment is. Okay. And you want to make sure all of this is included. Don't do anything separate. Some of you might be good at saving up for taxes, but make sure everything is included in your monthly mortgage payment. Okay. Now, let's go into, I kind of touched on this a little bit, but the offer acceptance, option period, and inspection. All right, just real quickly. So as your realtor, I put in the offer for you. The listing agent will confirm with their seller, with their client, if your offer is going to get accepted or if they want to negotiate a couple of different terms. All right. Once that offer gets accepted, okay, we immediately go into the option period. So you have to deliver your earnest money and your option money all together in one check to the title company, okay? Or they'll come to you and pick it up, all right? You will have an option period of 3 days, 5 days, 7 to 10 days. It just depends on what the terms are that we decided to go forward with, all right? Again, in the Austin market, we are seeing either no option periods or we are seeing very short option periods, all right? Normally, it's 7 to 10 days, okay? Once we go through that option period, we have to get an inspector to come out, look at the home, and go over all the things I talked about earlier: foundation, plumbing, electrical, roof, et cetera, et cetera. They're going to give you a full report All right, maybe about 30 pages. It's a lot of information, but you and your realtor, we review it, we go over it, and we decide if we want to negotiate to get any repairs done. Or sometimes the seller will just give us a credit if we negotiate that, or it'll be up to us to get the repairs done after you close. Okay, so those are just a couple things that have happened throughout your process in order to get to the closing table. Okay, but we got to talk about a few more things before we get to the closing table. So let's talk about the appraisal, Becca.
Awesome. Okay, so once you are under contract, which as Dr. Kerrie was just talking about, sort of the steps there. So it's like you make the offer to the seller accepts it, everyone signs. Now we are under contract, and everything that's dictated in that contract is now in play. So when that happens, I will get a copy of the contract, and of course you'll already be pre-approved. And so I will just go through and set up all the specifics of that contract now in your loan file, get you your initial disclosures and get those signed. As soon as those are signed, I'm going to get your appraisal ordered. That goes through a third-party appraisal management company, and an appraiser will accept the job, and then they'll give us a due date, and so we'll know when it's due. And essentially, they're doing two things. One, they're going to go out and look at the property at some point, and they'll arrange that with the listing agent on the seller side. So they're going to check out the property, but they're also going to do their research on comparable sales or comps. You'll probably hear the word comps used a lot. So those are comparable sales. So it's other homes similar to the one that you're buying that have sold ideally in the last 6 months, and normally within a 1 mile, and then sometimes you can go a little bit wider range, and that just kind of varies based on where. I mean, obviously you have to go a little further if you're more of a rural area, but they're going to tell us what the value of the property is based on all of those things, based on what they have and what other properties have sold for. And it's really important that the appraised value comes in at or above what you've agreed to with the seller for the sales price. And there's a couple different things that you can do as far as whether or not you're willing to, if the appraisal comes in low, how you're willing to deal with that. And I think that's probably a better thing for you to go through with your realtor, or go in depth with Dr. Kerrie, all the ins and outs of what to do when that happens, and the disclosure that goes with that. But just know, ideally, we want that appraisal to come in at or above the sales price that you've agreed to. Because really, ideally, you want to be buying a home for a price. You want it to be worth what you're paying for it, is kind of the concept behind that. And did you want me to dive into survey real quick? I think survey might be next.
Yeah, you could go ahead and dive into survey. And then I do want to just say one thing about the comps. So before we actually put in the offer, I always run fresh comps. Okay, so what I like to do is I'll go into the MLS, I'll run a search, look at the map, and kind of see what houses in the area have closed that are similar to yours. That way, when we're putting in an offer, like I have a good idea, like this home should appraise or above. Okay, so we're not going in blind. I'm not just throwing out offers. I'm actually doing research and running a comparative market analysis to make sure that the offer that we're putting in is the right offer for the house.
Absolutely. Yeah, absolutely. Awesome. And then the survey, I know we talked about this earlier. So oftentimes the seller has a copy of the survey, and if they haven't made any changes to the property, and the title company gives it the thumbs up that we can use that, then you can just use that and pass it forward. But essentially a survey is like a bird's eye view of the property, shows all the specifics. So the property lines, where the house sits, if there's any building or utility easements, buried cable, all of these things are very important, right? If you can't build something within a certain area because there's a building restriction line, that would be important to know before you put in your pool or something like that that's permanent. So the survey shows all of those things. And so like I said, seller normally has a copy. They normally haven't made permanent changes to the property that aren't reflected on the survey. And so you can often use that. If a new one is needed, there's the option for you as the buyer or for the sellers to pay for a new one. And depending on the property, I would say normally they're roughly maybe $450 to $500 or so for a new one. But definitely if you have to get a new one and you pay for it, you want to hang on to that puppy so that whenever you sell, you'll have it to then potentially be used and then hopefully not have to deal with needing a new one again.
Yeah. Awesome. Thank you, Becca. All right. So now we're at the closing day. Okay. Closing day is the best part. Why? Because you get your keys. Okay. So you've gone through the pre-approval, or you've gone through goal setting, budgeting, pre-approval, offer, acceptance, inspection period, like all the different things, right? Becca has gotten all the paperwork. We are signed off and she has sent us both. We are clear to close. Those are the best things I love showing up in my email. Clear to close. Because what happens is we get to move forward. So we set a closing date, all right? And your realtor should be with you at the closing day. All right. I do know of some realtors that don't go to closings. I don't know why, but you know the paperwork, right? Especially if you're a realtor and you're a homeowner, you understand the process. So you want to be there, especially if you have a first-time homeowner. Be there with them to walk them through the process. Now, there is a closing agent that goes through every single document. I'm talking about it's a stack of paperwork, okay? It'll take you about an hour to get through closing. However, you're going to get all the information that you need. If you do a new construction home, the day before closing or a couple days before, you will do a final walkthrough to go through all your warranties and stuff. But we're really just talking about resale right now. But at the closing table, you're going to go through all the paperwork, make sure your realtor is there. And at the end of it, you get your keys. Okay. Becca, do you want to touch on anything in particular for closing day?
Just that usually a couple days before closing is when I'll have your final numbers, and I'll send you an email that has all of the details, where you're going for closing, when you're going there. It'll have your final closing disclosure and your final numbers, give you directions on how to get the money to the title company, either via cashier's check or wire. So that all of that information to prepare you for the very happy day where you get to sign and get your keys. You usually have a couple days before closing, at the absolute latest the day before. But in most cases, it's 2 days before.
Yeah. And just to talk about like the closing day, you want to make sure that, you are really like prepared, right? A lot of people get a little nervous or whatnot, but just take a deep breath, make sure you eat you some breakfast, go in there and just knock it out, right? And then once we actually close and fund, that's when you're actually going to get your keys. Right when you get done writing the signing on the dotted line, you're not going to get your keys immediately. It has to close and it has to fund before you actually get your keys, and then you can start moving in, right? So I always tell my clients, just because it's closing day doesn't mean you're going to get your keys on that same day. All right. So I've seen it, unfortunately, maybe be the next day, right? Sometimes it might be 2 days later, but for the most part, you want to just wait for your movers. Just get them scheduled for the day after or a couple of days later. Okay.
Yeah, that's it's kind of a running joke in our industry. Like, don't show up to closing with your moving truck because that is when something's going to happen and we don't get keys. So even if you're planning on like moving in the afternoon or whatever, just like, I don't know. It's like having bananas on a boat or walking underneath a ladder. It's just, don't show up to closing with your moving truck.
Please don't. Please don't. Okay. So now what we're going to do is that is the end. We have walked you through every single step. Sorry about that. So do y'all have any questions at all for us? I'm going to go to the comments. So let me just see if there is anything out here. All right. Just going through some of the comments. Hi, Tammy from Houston, Maynard, Texas, but Austin, ATX. I see you, Vanessa. All righty. I see. Thank you so much for tagging people in this. I appreciate it. So if y'all have any questions, drop them in the comments real quick. But we want to share our contact information. Okay. So I am Dr. Kerrie Carter Walker. My email is kerriesallesaustin@gmail.com. And my work number is 737-242-6329. So if you have any questions about the home buying process, all right, feel free to email me, text me, let me know. All right. If you want to schedule a consultation, email me and my assistant will get you on my calendar. I have a Google form that have everybody, whether you're wanting to lease or you wanting to buy or sell. You fill out a Google form. I get you on my calendar. We set up an appointment and then we move forward. Okay. But I hope you really got something from this. Becca, her information, you want to go over it real quick?
Yeah. Becca Christensen, 512-299-0396, Becca@mortgageright.com, and website WeMakeLoansFund.com. So
yeah. Love it. Let's see. All right, here we go. We got questions coming in. Perfect. All right. Awesome. How long from offer acceptance to closing? That's a really good question. You want to take that, or do you want me to take it?
Yeah, I'll take it. Typically 30 days for the most part. If appraisers start moving a little faster, then maybe we can go a little faster. But right now, that's about the time frame. So offer accepted under contract till your closing day, getting the keys is roughly 30 days.
Yep. Great question, Vanessa. All right, Kevin. So the option money goes towards the escrow account, correct?
Towards the funds that you're going to owe at closing time.
Yep.
Essentially, at that point, it's like you've prepaid some down payment with your earnest and option money. Yeah.
All righty. Any other questions? Feel free to drop those real quick. All right. Take your time. We're not in a rush. We don't have to go anywhere too bad. Let's see. I mean, I do need to drive home, but how many types of loans are there? Go ahead, Becca.
Countless. I'll say the ones that typically are used. You've got FHA, conventional, and within conventional, like there's one that I was just using today. That's geared towards first-time home buyers with a 3% down. So FHA and conventional are probably your primary two. VA loans are another one if you are a veteran and are qualified for a VA loan. And there are USDA loans, which are typically more in rural areas. I would say they're just much more challenging to qualify for because both you as the borrower and the property have to be eligible for that. And they just are real picky. So those are really the four main types of loans. But if we're talking like first-time home buyer or buying a primary residence, those are the ones you're going to use. If you're talking about like buying investment properties and other things, well, there's lots of creative lending. So endless possibilities there.
Yeah, and I am going to have another class on Saturday with another lender that I use and a credit repair company as well. And we're going to be talking like directly to entrepreneurs, and we're going to be talking about the entrepreneur loan, the bank statement loan that we can use. So that's also another option as well. So Vanessa, thank you. Keep the questions coming. I love it. All right. Becca, this is for you. Do you help with credit building or know a company who can help?
Yes. So typically I have a credit analyzer. And so if we're close to where we need to be, and there is, depending on your credit profile, if there's action that we can take immediately and get an immediate, what's called a rescore, which essentially forces the bureaus to update the score based on that action, then I can do that. There are times where what is needed is a little out of my depth or my analyzer doesn't have a plan to get to the points where we need to be. I do have 2 different credit repair companies. Sounds like Dr. Kerrie, you have one as well. So that's amazing. That work with clients and help you. The ones that I use, I'm guessing Dr. Kerrie too, specifically work with people that are trying to get mortgages. So they know sort of what we should be focusing on to get you where you need to be, hopefully in the shortest period of time. Because if you're doing credit repair, you don't want to be in credit repair for forever. You want to do it, do the program, do the process, and then be out of it and be ready to move on to the next step with an improved score.
And I will say this, just because I've had a lot of people that will DM me or message me and let me know, hey, like I'm ready to buy a house, but my credit isn't where it needs to be, but they're not patient. Like this process, you have to be patient with yourself, patient with Becca, patient with myself. Like you're not, like if you're working on your credit, take your time. Right? Go through the steps that we suggest in order to get your credit where it needs to be. I've seen people go into these rent to own mortgages, and the interest rate is out of this world. The mortgage payment is, $3,000-$4,000 for a home that really the mortgage should be about maybe $1,500, $2,000, right? So be patient with yourself throughout this entire process. I hope you got some really good notes from this because you don't want to rush it. You do not want to rush this process. You want to get into the home that you deserve and the home that you really want. Okay. Next question. What type of paperwork do I have to have as a buyer?
Great question. So typically basic income and assets is the best way to think about it. So let's just assume a W-2 employee income. So typically we would get a copy of your driver's license, copy of your most recent bank statement or whatever account you have the funds in for your purchase, most recent couple of pay stubs, most recent year to 2 years, depending on loan type, of your W-2, that's the document that your employer sends to you Typically, like we're all probably going to be getting our W-2s from last year soon. And that's what you use to file your taxes. And then in some cases, 1 to 2 years of your actual tax return. If you're self-employed or a 1099 employee, you do contract work, all of the own properties, all of that will change the documentation, but the rest of it is the basics.
Awesome. Great question. All right, Kevin, this might be a little off topic, but what's a great way to market yourself as an agent? Oh, that's not off topic. I love talking about this. So basically, Kevin, what I've done to market myself, right? A lot of you might have known me as a assistant principal, right? So Becca used to be a teacher, okay? And so it's really important to make sure you do things to set yourself apart, right? So I pride myself on the client experience, and I know so does Becca, right? We want to make sure you feel secure and you trust who we are. Right. So I'm always putting out educational videos. Right. So what are some things that people need to know? Doing home buying seminars like this to let the community know we are here as a resource. Right. We're not here to promote our businesses. We have a lucrative business. We get lots of clients, but we love to help people. Right. We are here to serve. So, Kevin, I would definitely say make sure you serve your community. Right? Make sure you market yourself on Facebook, on Instagram. Make sure you create an email list, right? A database. A lot of realtors get into the real estate game and they think, next month they're going to be closing 10 deals, right? I went an entire year without selling a house, okay? Because I didn't have anyone to mentor and coach me. So that's another suggestion. Get you someone who is going to help you. Look at their track record. How many houses have they sold? Right? How many buyers are they helping? Are they doing anything to help the community? Right? Those are the type of people you need to surround yourself with. Don't just get with the first brokerage that messaged you. Right? Once you take your test and you pass it, you're getting emails, you're getting phone calls, like you're getting hit up by everybody. Interview the brokerage to make sure it's a good fit for you. Right? I was with a brokerage and I loved it. But I didn't sell a house because I wasn't getting trained. I met Renee Jordan, who was at New Hope Realty Group, right? I'm sitting at her desk actually today. And she met me at an open house and she said, Kerrie, I want to help you. That Monday after the open house, she emailed me and said, I want to coach you. Let me help you build your business. And when I tell you, I went from 0 houses to closing 7 deals from, I believe it was September to November. 7 deals back to back to back, right? And then now I'm able to help even more people in 2021. And even more in 2022. My goal is to help about 33 families get into homes this year. Okay. And so you have to market yourself, social media, get a mentor and a coach, and make sure you build a solid database of your friends, of your families, of anybody you network with. Go to as many events as you can and talk. We can't be closed and staying at home. I know COVID is scary. I just recovered from COVID. So I understand, but market yourself, get out, network, and get with like-minded people. So that would be my suggestion, to help out, you market yourself. Cherish, you said, thank you. I have a lot of entrepreneur friends. Yeah. So Saturday I have a class. Jasmine Moore, she's a lender in San Antonio, and Dylan, he is a credit repair guy. He has an amazing company that's going to help entrepreneurs build business credit, understand how credit works, and get you where you need to be. Okay. So tune in Saturday, 11 a.m. I'll post a flyer either tonight or tomorrow. All right. For information about that. Becca, what credit score do I need to be at?
Right now, 620 would be the minimum, and that is adjusting because before COVID hit in earnest, we were at 580, 600. Then it went up to 680, and now it's slowly kind of been coming down. So that could change, but as of right now, 620.
Awesome. All righty. Do you have any agent trainings that you specifically recommend? How do we get blessed with the Renee? Well, Vanessa, you have me. Come on over. Man, like agent trainings that basically like the trainings that I get just from being at New Hope Realty Group. Today I came into the office because I had to get a lot of things done, like writing offers. I had to show a house and a couple other things, but honestly, just sitting here, asking questions, going through contracts, things that I don't understand, and, just being open to the coaching, right? A lot of people aren't open to that. You have to be open-minded and be willing to accept feedback. But like I said, interview brokers to see what types of trainings they provide for you. Are there any trainings at all? Or are you just, like I was my first year, I didn't have any trainings, I didn't have any support. Okay, so interview brokers and see what their training schedules are. Okay. And then Kevin, what we got? I definitely want you to be my coach and mentor. Come on, Kevin. I got you. Come on, Kevin. Y'all got my information. Email me, text me. I would love to help you. All right. I don't charge for it. I'm just here again. I love helping the community. Love helping realtors build their business. I'm 3 years in and I'm doing really good for myself. Okay. So I've doubled my business in the 3 years. And like I said, I'm trying to help 33 people, 33 families this year close on some homes, and Becca is my number one lender. So we're going to get y'all to the closing table.
Absolutely.
All right. We have time for maybe one more question if anybody has it. If not, we appreciate y'all for tuning in. And yeah, I love the questions. These were really good. Really good.
They were excellent questions. Yeah, definitely.
Vanessa, Kevin, let's get it. Let's go.
Yeah, and honestly, as you like, if you're hopping on and you're seeing this after we've ended the live, or if you're percolating all the information and you come up with more questions later, you've got our contact information. So just reach out to either of us, and we're happy to continue the conversation and answer more questions. Certainly, we're available after this live to do that.
Absolutely. And Becca's information is right here on the screen for you. Make sure you screenshot it, give her, text her, email her. Okay. And then my information is right here as well. We're here to help. All right. So whatever you need, just let us know. Closed mouths don't get fed. You got to ask your questions. All right. If you really want help. All right. Now let's see. All right, we just got a trophy. Appreciate it. Thank you so much for tuning in. Becca, thank you so much for doing this with me. This live will be up for 22 days. So tell your family, tell your friends, go to my page, and they'll have access to it for 22 days. After that, I'm taking it down. I will see some of you on Saturday. I'm having another training, but it's directed for entrepreneurs that really want to own homes, okay? This tonight was for first-time homeowners. Thank you so much, Becca. I am Dr. Kerrie. I love y'all so much. And y'all have a good night. Becca, you can.
Bye, everybody. Have a great evening.
You can stay on real quick. Bye, y'all.